Hi everyone, welcome to today's video. So up until very recently, US was the #1 economy in the world. Anyone, even our friends, relatives, and they used to go to the US, बहुत बड़ी-बड़ी बातें करते थे, इतने बड़े मॉल होते हैं, ये होता है, वो होता है. And you know, after they used to come to India, people used to look at them with a certain reverence. But no such thing exists now. What has started to happen over the last couple of decades is that the dominance of US has been aggressively going down. There are a bunch of reasons. For example, right now there is political instability. There is a lot of bickering that is going on there. On top of that, the US government and US Fed has decided to print crazy amount of dollar, which is somewhat, in a way, generating a lot of backlash for the US. On top of this, countries like India, Russia and other BRICS nations, they are also developing their own processes and systems that will help them curtail the dominance of US dollar. For example, India has built its rupee settlement system and a lot of countries have started to use that. So to cut the long story short, the dominance of US is aggressively going down and this is an important change that we need to study. Now the interesting bit is that if you go back 20 years ago and ask yourself the question, at any point in time, this US dominance, would it come down? Most of us would have thought that this dominance would never come down. But things change because in the coming years, a lot of trends might come into the picture. For example, new finance strategies might get introduced and such factors might affect the economy positively also. A very random but simple example could be a hair loss, because just like the economy, controlling hair loss needs to be done on time before things collapses entirely. Also, this is a historic moment for my channel because this is the first time I'm going to speak about a brand called as Traya. So make way for me models because Akshat is here. Now many of you would say that, okay, why are you speaking about brand, this, that? Okay, so number one, sponsorship. Number two thing is that the product is scientifically backed. So be it economy or hair loss, you need to get at the root of the things and then opt for the best suited solution. Traya does exactly that about hair loss. It helps you identify the root cause of your hair fall first, which could be diet, sleep, stress, hormones, etc. and then give a customized treatment approved by doctors. Traya has shown positive results to over 2.5 lakhs Indians in 5 months. So if you have hair loss, Traya's 3-step plan can help you. Head to traya.health and take the free hair test. Get 1 month customized plan. Start your journey with a free diet plan and hair coach and see results in 5 months. You could use the code Akshat20 to get 20% off on your purchase. So check the links in the description box and over to the main video now. So there are 3 critical points that you need to know. Number 1, you need to understand how important the US dollar currently is in the world global money system. Second key point is that what exactly is the US government and the US central banks are doing that is making the entire world very unhappy with the US dollar. Third and finally, that countries like India, China, Russia, they are migrating to their own money systems and are bringing other countries along with them. So how exactly is this transition period going to play out and what impact is it going to have on the investment community at large? So this is one of the most important videos I'm doing on this channel. Very humble request that if you like these type of topics, do press the like button. I know that you haven't pressed it. Do press it. It would allow these type of videos to reach out to more people. So point number 1 is that how important is the US dollar right now to the entire world? So to cut the long story short, the US dollar is fairly important to the entire world. So why is that the case? For this, you need to study major macros. For example, consider the world trade and the US dollar share in the percentage world trade. It comes out to be at the top. If you consider US dollar from a global GDP perspective, that what is the contribution of the US dollar to entire world's GDP, it comes out to be roughly 1/3. So this is again a fairly large number. If you talk about cross-border loans, if you talk about international debt securities, if you talk about forex transactions, then the contribution of US dollar is still fairly significant. Then of course you will have a natural response कि यार इसके through तो लगता है कि US dollar is still very important and you are making a video that this is the death of US dollar and whatnot. So how are you correct? So for this, you need to get into the nitty-gritties of US dollar and start understanding specific functionalities of the same. So one of the key things that countries do at a national level is that they maintain something called as forex reserve. Now I'll explain that in a minute, that what does India's forex reserves look like. But basically forex reserve, you can imagine it to be type of a tejori that India, for example, we print INR or Indian rupees. But what would be our foreign tejori like? So the RBI and the government will have a tejori and that is called as forex tejori. And in this they put foreign currencies and other assets. For example, India's forex comprises of gold. It also comprises of US dollar. It also comprises of Great Britain pound. It also comprises of Japanese Chinese yen. Now all this collection is put into a tijori called as the Forex Tijori of India. Now this is not only done by India, this is done by a bunch of other countries. They also create their Forex Tijori and stuff it with a bunch of foreign currencies in it. So back to the story of the fall of the US dollar, what you will see from this chart is that the share of official foreign exchange reserves in terms of US dollar has been consistently going down, and this trend has accelerated quite aggressively over the last 2 decades. And this is sparking a conversation that, you know what, this is probably the death of the US dollar. So now comes the most important question as to why other countries do not like US dollar right now, and what specifically is the US government, US central banks are doing that is just irritating other countries. Now this is a hyper complicated macro concept. I'm simplifying it in very easy to understand terms. Of course, for simplicity perspective, you might not get the entire picture, but I hope I'm able to communicate the central point in a very precise manner. So this is what happens, that in simple words, US is exporting inflation to the world. Inflation in very simple term means the increase of prices. For example, if the cost of white bread 2 years ago was 15 rupees, now it is costing 30 rupees, then the inflation has gone up by 100% in the last 2 years. So that is the meaning of inflation. So then comes the natural question that, okay, how exactly is the US exporting inflation all across the globe? So the mechanism looks something like this, that the US has absolute control in terms of printing US dollar. Right now, as I showed you from a previous graph, that a lot of world trade, lot of forex reserves depends on what? They depend on the US currency because currently the US dollar is the reserve currency of the world. So the first key problem that happens is that as the US government prints more and more of the US dollar, and imagine that India is having $100 billion of USD, then what will happen if the US government is printing more of the US dollars here? Well, because there is increased supply of the US dollar, the value of this US dollar that is kept on India's forex reserve tijori, it goes down in value. So this is the first key problem that other countries are facing, that acha, we are doing everything, we are shoring up our reserves, but the US government, it keeps on printing as much currency as it likes, and that in a way deflates the real value of the assets that we have built in your currency. So this is the first key problem that happens, and this is the first part as to how inflation is exported to the world. The related point that happens here is that a lot of governments' external debt has been taken in US dollar terms. For example, these are the figures for Pakistan. You can see that a lot of debt was maturing in US dollar terms. Now, as the real value of the forex reserves of a particular country, if it goes down, then what is going to happen? Well, it becomes difficult or more and more difficult for a country to refinance its external debt. Now, this is a complicated point, so let me take a minute to explain this. Now, there are 2 broad types of debt that exist. One is called as external debt and one is called as internal debt. Now, consider, for example, that the Indian government prints money, and every time the Indian government prints money, what is happening? It is taking debt. From whom? From the public in a way. So that is called as internal debt. Why is that the case? Because Indian government has printed INR, and that is an internal matter of India. So this type of debt is easier to manage compared to external debt. Now, a lot of countries, for example, Pakistan, they have very high value of external debt, which is denominated in the US dollar. Now, if the real value of US dollar goes down, the creditors, people who have lent out money to Pakistan, they will come and say that, you know what, we gave you like $50 billion of loan in US dollar term, return us back that $50 billion. They'll say, yaar, nahi ho paega, we will not be able to make that payment. Please refinance our debt, give us like slightly more repayment period, we'll pay back to you later. Then what has happened is that because the forex reserves have gone down due to this increased money printing, what are the terms that these external banks are going to levy on Pakistan? They are going to say that, okay, theek hai, kar denge, but the issue is that your forex reserves have gone down. The currency that you actually hold is less valuable now. So what you need to do is that these are the new repayment terms that you have to sign and agree to, and we will issue you a new debt. So to procure same amount of debt, they are getting worse terms. Whose mistake is it? Surprisingly, it is the mistake of the US, and in a way, one could argue that these countries have taken a lot of external debt in the US dollar. So every time the US government turns on the printer, this becomes an internal debt for them, and it does not hurt them as badly as it hurts countries like Pakistan. What happens there is that it leads to a lot of instability because, again, due to that external debt issue, that leads to devaluing of the Pakistani rupee compared to the US dollar, despite the US printing printing money. Now, as a currency gets devalued and the economy weakens, there is inherent price rise in that economy. You might have seen that Zimbabwe went through a period of hyperinflation. There were problems there. Pakistan, Sri Lanka, all these countries. Why was that the case? Because the economy weakened. Why did the economy weaken? Because they had a lot of external debt. It was probably denominated in the US dollar, which ended up becoming a much bigger problem for these countries. Now, just for context, if you want to take a look and compare at what rate the US government has been printing money vis-a-vis the Indian government has been printing money. So take a look at these two charts. So back in October of 1990, there was 274 units of US dollar in the play, right? So you'll just call it units. And now it is 2,297. So in 30 years, it has gone up by like almost 10 times, which is absolutely nonsensical. If you want to do a trend line, right? So you can draw this like this, that there was a gradual rise and then suddenly after 2008, this was the new trend line, which was steeper. And now we are on trend line 3, right? So this is trend line 3 and the trajectory itself has changed as to how much US dollar is being printed in the world. And this is destabilizing other countries more compared to the US. So just very quickly pointing to the currency in circulation in India, you can see that our numbers have been reasonably okay. There has been no internal problems there, but because Indian rupee depends quite a lot on the US dollar, because of excess adventurism from the US, even India is suffering from inflation and other problems. So then comes the third part of the story that, okay, fine, there are problems in the US economy and probably the world can see through it. No one wants to hold the US dollar from an external debt perspective. What happens next and what exactly is happening? So this graph is a very good representation. This comes from IMF. This talks about the dominance of different currencies across the globe. So the first key thing that you will notice is that if you study the data from 2000 onwards, and even if you go and study something like euro, the dominance stagnated, then it started coming down and now it is flattening out. So the dominance hasn't really increased for the second most important currency, which is euro. What about China? So China has almost stayed flat, right? It was once said that China is going to overtake the US, but hardly anything significant has happened there. What is interesting about this figure is this 10% other figure. And you will see that there has been a mass adoption of this 10% other figure. Now, before 2010, this number used to be 3-4%, but in the last 10 years, this number has almost doubled. So what does this other means? So we get this clarity by reading a research paper, and I will link it in the description and comment box. This comes from IMF again, and the report title is The Stealth Erosion of the US Dollar. So here they have defined what is the meaning of this others currency and how other related currencies like GBP, yen, etc. are performing compared to the US dollar. So here are the results, and I'm reading it out with you. Our results challenge is framing the euro has gained little ground as reserve currency, while the renminbi, which is the Chinese currency, has gained some ground. It remained leagues behind the US dollar to form international reserves. The most notable trend in the recent decades have been the rise of non-traditional reserve currency. This is what is meant by other currency. The currencies of countries without the economic scale and volume of cross-border transactions that distinguish traditional reserve currency issuers. To simplify, this means currencies like INR, we have Russian currency, we have African currencies. So if you put these emerging economies, so to say, combined together, they are contributing and challenging the US dollar in a way. Important point to be noted here is that it might be great that if INR becomes the reserve currency of the world, but we are far away from it as of now. But collectively, the emerging economies can get together and can potentially challenge the hegemony of the US dollar. Now, before we end the topic, let me quickly comment on some of the major investment-oriented changes that might happen in the event the US dollar collapses. So first and foremost, the US dollar is already on a downtrend. So it's not as if that just suddenly we'll get up and US dollar goes bankrupt. No, the world will suffer a lot of pain in case that happens. So that is unlikely to happen, but slow gradual change is already happening. And going forward, the dominance of the US dollar is very likely to go down. Second key thing, the dominance of other currencies is going to rise. For example, when it comes to India, when it comes to the Russian currency. So all these are going to get together and are going to present a strong competition to the US dollar, no doubt about that. And whenever the local currency appreciates or whenever it gains more power, the Indian investors are going to derive benefit out of it, no doubt about that. But along with it, there will be negative connotations. For example, first and foremost, the entire US is built on debt. So I'm simplifying here due to the paucity of time. So if you study the Silicon Valley model, that model is debt-fueled model. Therefore, you see a lot of companies like, you know what, that 1,000 crore loss and they are being celebrated कि यार हमने बहुत बहुत बड़ी कंपनी बना ली, this that, right? So this type of startup building and company building is debt fueled only, and the genesis of it starts from Silicon Valley, where people could just simply give presentation and raise like millions. So that is what the model was. This model is likely to change going forward in the future. Why? Again, take a look at this particular chart where crazy amount of US dollar printing has been done. Now think about it, that if the rate of dollar printing goes down, then what gets hurt the most? The entire concept of taking loans gets hurt the most. So what type of companies are likely to suffer the most going forward over the next 1 to 2 decades? My hypothesis here would be that debt-fueled companies that is built purely by burning investor money is going to get deeply cut. On top of this, as the dollar dominance comes down, we will live in a world of high inflation. This is going to be a massively painful period for all of us. And unfortunately, it is very, very likely that we will see this period in our lifetime. So that is not going to be a very pleasant period according to me. But from an investment perspective, please try to control cash flows. How exactly, if you want me to make a video, I'll definitely do it. But if you're doing stock investing, then pick companies that can provide you hedge against inflation. Which type of companies? For example, Hindustan Unilever is a classic case that was able to raise a lot of their prices irrespective of whatever was happening in the world. So try to buy these type of companies. That is what my simple suggestion would be. Stock market growth will come, no doubt about that. But majority of that growth will be inflation driven growth. I hope you enjoyed this conversation. If you did, do press the like button and I will see you very soon.